Good morning, everyone. Paul Duncan here with Gamma Edge. Today is Hump Day, May 8th. It's about an hour and a half before the U.S. market cash open. Let's go ahead and get started. Please pause your viewer, read this. It's important to you, it's important to us. When you get done, push the play button. Still seeing a mixed picture when we take a look at the overall index conditions. As expected, we had some put structure increase yesterday, but we also had some call structure increase on the SPX. The SPY didn't really see a major change in the overall put structure, so the cumulative net negative gamma is unchanged in the SPY with a little bit of an increase in the calls. This is usually a bullish foretell here, so we want to take a look at that. The Qs, didn't see anything on the call side of any significance, but we did see a decrease on the cumulative put side. These are all short-term because this is gamma, this is short-term expiry. Dropping, that's usually a good thing, indicates monetization is going on. The fact that we're not seeing the gamma increase on the call side doesn't mean that calls were not bought, and you'll see that here shortly, but what it means is they are not necessarily short-term calls. Taking a look at IWM, mixed picture, no demand whatsoever. It's almost a flat line on the cumulative positive gamma here, but in the negative, cumulative negative gamma did drop slight amount, not anything really to get excited about. When we take a look at the near-term expiries, I've called out some of the key levels here. The black dot indicates where we are. We are in the money to the right of this, so any of these red spikes that you see here are net gamma levels. Those generally correspond to a dominance of puts, and so as we go deeper and deeper and deeper into the structure, we have more in the money situations developing. Cash settled SPX, there is no real reason for them to lock in those profits, especially the put holders that are up in here as we go left, because they are most likely going to limit at -1 on their deltas. But as we get lower and lower and lower in here, there will be people who will transition from a net negative to a net positive, or excuse me, net positive trending out of the money to net negative trending in the money. And they may want to monetize, so we may see some of that. That carries over to the equity settled SPY, Qs, and IWM. A little bit of a change here. You can see the dominant level here at 390 in the SPY, 296 here for the expiry in the Qs, and 173 here in IWM. And you can note that the dots are significantly above these levels. This being said, if we do push lower, these would be areas that I would see reversals, and of course, like always, if we do lose these particular areas, the in the money, out of the money equation changes dramatically from a perspective of the deltas, and we could see a monetization because these are equity settled. People will not necessarily want to cough up say, $39,000 per contract to and hold SPY short, especially in this oversold condition that we're in. So give a watch to these. The other thing that I want to highlight here is that we are in and approaching the zeros of the complex. When we approach the zeros of the complex from an expiry point of view, typically there's not a lot of pressure in the expiry, and I think that kind of holds close here for the SPY, the Qs, and IWM. Your takeaway from this, from my perspective, is there's not a lot of pressure for monetization here, although it certainly can happen. Taking a look at the gamma history, we actually did see put open interest, which is this red line right here, drop. That typically is because the puts that were here at 400 were monetized, and that exposed the level here. A little further analysis is required on your part or our part to take a look at that 380 level and see if we saw puts rolled down or not. They may have taken their profits here at 400 and rolled them on down to 38, anticipating a further decline in the SPY. The Qs, not really much of a change, so not seeing a full impetus to do something. We did have a push downward yesterday, 2 days ago, excuse me, in the positive gamma. a positive GEX level, and typically we see this on anticipation of moving north. So we would expect that the folks who are looking at the cues and looking at the individual components of the cues are anticipating some sort of short-term rally and have positioned their calls closer in. This is plus GEX, so these are shorter-term dated calls, and we may see some sort of a movement upward here. Taking a look at IWM, no change in the structure. We're below POI and minus GEX. We're remaining below that. Now, typically we do correct this, much like you see over here, where we actually see a monetization and that drops POI. We're not seeing that. There is no anticipation of an upward move right now, and these people are locking in or maintaining their in-the-money status with their long-term puts as well as the short-term minus gamma levels. So takeaway here, look at the cues. I think the cues are where we want to focus some of our attention here for a short-term upside rally. Taking a look at the flow summary, we did see puts being closed in the SPY yesterday, a little bit of a bump in the afternoon as weakness reappeared, and then we saw some monetization into the close. We saw calls being accumulated. Net, more puts in overall premium were closed than calls were added. So some monetization there. Just give that a good look-see there. Taking a look at the cues. Significant amount of puts being closed midday, some being added back in, but net, you can see that overall very positive on the cues. So we think there's positioning going on here to take advantage of both the SPY and the cues, stronger in the cues, as I was just saying on the gamma summary history charts. IWM, it's just weak. We're not seeing any directionality here. There's very little activity on the call side. The put side looks like day over day we get this type of behavior. Some people monetize because of the drop, and then we see just more addition on the short term for the small caps. So for IWM, we're coloring that, still broken, and I'm not looking much at the Russell 2000 except as a downward stance. The market model here, effectively a linear down, terrible breadth up here. So the filtered cumulative tick all throughout the morning session and into about the 13:30, you can see here, so 1:30 Eastern time. Just risk off. Looked like we were going to try to move upward out of the open, and then it failed at about 10:30 or so, and away we went. That's this flat nature here in the overall cumulative tick. We'd like to see some sort of continuation down and then a move up. We did not get that. Typically when we see a reversal out of the open, it generally fails, and so that holds for today. I actually want to see things continue south and then get a midday reversal if we can get it. We'll see what happens here. Ending the low of the day is typically, on the low of the day for the cumulative tick, is typically a bearish sign. It means risk off into the close, and that's something to note. Overall long-term trend still down, so as far as I'm concerned, until we get a change in sentiment and a real plunge here, you can short the rips. Taking a look at the overall SPX structure, still below transition, deep in red, really the same title from yesterday. This is the transition zone shown here in blue, and you can see back and forth all the way across here. Loose transition area. If we move up into this area, it's just going to be Chop City, and that'll be the time to sit on the sidelines. We're way down here at the 4,000 level. It's the biggest structure, gamma structure that we have right now, and you can see these other key levels here, 42, 4100, and then the intermediate. Your eye can tell that this is a 50, 50, etc. So you can see the 50s, the 25s, and then the century marks, the Livermore marks here. So we've got a lot to plow through here, not anticipating that's going to happen anytime soon. Expiration profile, we continue to grow on the negative expiry here. Not really seeing a large expiry for today. For Friday, continues to build, definitely is going up, and that could be fuel on a relaxation of VIX into next week. We're just going to have to wait and see, and then beyond the monthly, you can see it's very weak, very loose here. Taking a look at the 0 DTE, Basically, this just shows here at Circle 1 we are in a 0 DTE. 2 is overall negative. We're growing in some magnitude, as you just saw on the previous slide. The dominant positive call expiry today is up here at 4150. You can see there's another level here with the dominant gamma expiry sitting here at 4100. Looking down here, this blue box is the transition zone. I just want to draw your eye to this 40-45 area, 40-50 area that you can see here. Typically when we see a structure like this, these could be a good trapping area either above it into, you can see the zeros back and forth, or right at the transition. So I'll be interested to see if we get some sort of push upward in the short-term transition, expiry transition in the SPX up into this area into the close. Downside, just take a look at the pairs that we have here and just a large amount of expiring gamma. Typically, if we do fall today, we're going to be sticky through these areas with retests and things like that. Play off these levels as you see fit. Taking a look at the combo, remember the combo is the AM and the PM settled. We do not include any of the SPY products into this, so no ETF products are built into this. Extremely large net negative gamma. We have not seen this come off. Still 25% or so expiring on the monthly, and then you can add in some of these other pie slices to take us up to nearly 30% of the SPX is expiring between now and next Friday. Dominant negative on both the gamma column here as well as the net delta notional, and I've highlighted some really big numbers. A lot of adjustments need to occur in both the ES and the SPX as we push through these different levels. Because of that, it's going to be difficult to transact a lot. I mean, there are limitations of what the dealers are going to be able to do here. So 4100 brick comes out as a key level, of course, 4050, 3950, and 3900. And you can see we're sitting right here at Circle 4. So when we take a look at what are the bullish setups here, the Qs continue to see some calls being added and the puts being closed. And we also saw that plus GEX come down a couple of days ago. It's sitting right on top there. I think there are people who are expecting a rally within technology and are positioned to take advantage of that. Also note, I didn't really talk of it today, but the VIX has dropped to about 32%. So when that occurs, we want to continue to see a downward move here. So watch for puts being closed and reversal upward. And again, this TR-net flow, put your symbol choice in there and then just limit it out to about 30 days. 0.30 here is the monthly view. You can change this 0 to a 1 to get the daily view. So just remember that 0 is the monthly, where you get a month's worth of the data, and 1 is just the intraday. Taking a look at the bearish setups here, cumulative tick is still in the downtrend, right? So this tells me, first and foremost, we should be shorting the rallies. IWM, as I said, is broken. I think we play the downside on the R2K and maintain that stance. Everything very high net negative gamma, although it does set up a rally to the upside as I talked before. It's sticky. We're seeing a lot of puts being added overall, and they're not short-term puts. So I think that's a key thing here, and that's what's keeping the VIX overly at a high level. Because of that, I think you play the downside off of the key levels that are acting as a resistance. The 4100 would be my upper range and would play off of that. I don't think any of this is really in play up here, although I did include all the updated levels here. Other key levels to really watch. 4063 looks to be fairly interesting here today. Of course, we're at 4,000. Not a lot in there except for those interim ranges that I showed you earlier that end in 5 or 0, all the way on down to 39. So I think we're going to be trapped in this 39 to 4100 range, and you can play that as you see fit. So that's it for today. Urge everyone to come join us in our Discord, GammaEdge.us. We'll get you to a sign-up page. Come on in, kick the tires, 14-day free trial, all the tools turned on. No risk to you. a lot of great traders, some good visualization tools of this, and you can we can work with you to help figure out how you could overlay this into your overall styles. Follow us on Twitter at GammaEdges with an S, and then YouTube, of course. If you like today's content, hit that like button, and then also hit the subscribe, just so you can get notified next time we post something. So thanks everyone. See you in the Discord. Make it a great hump day, and good luck.